Welcome to The Explainer. Today we're digging into a pretty provocative argument that's been making the rounds online. It's all about a massive, and I mean massive, move from one of the world's most famous investors, Warren Buffett. So what does it mean when the so-called Oracle of Omaha starts selling, well, pretty much everything, at a pace we've never seen before?
So the source material we're looking at today kicks things off with an absolutely staggering number. It claims that over just the last 18 months, Warren Buffett's firm, Berkshire Hathaway, has sold off stocks with a gross value, get this, of nearly $1 trillion. Now, to be clear, that's not net sales or pure profit, right? But the sheer volume of assets being liquidated is just, well, it's a number that's kinda hard to wrap your head around.
And according to the analysis we're breaking down, this isn't your typical portfolio rebalancing. Not even close. The argument is that this is the single largest sale in Berkshire Hathaway's entire history, and that, they say, is a crystal clear signal that Buffett and his team believe holding stocks right now is just way too dangerous.
And what's really fascinating here is the pattern. This isn't some kind of one-off panic move. The video makes a huge point of this. Berkshire has been a net seller of stocks for 6 straight quarters. That's a year and a half of consistent selling. It really looks like a systematic, very deliberate, very calculated exit strategy.
All right, so let's get into the specifics. What exactly is getting the axe from this legendary portfolio?
Okay, the biggest bombshell sale, the one that really got everyone talking, is Apple. Berkshire has reportedly dumped about 2/3 of its position. And think about that for a second. This is the company Buffett himself called one of his best investments ever. This was supposed to be a forever stock for him. And now, a huge chunk of it is gone.
But it's not just Apple, not by a long shot. The analysis points to huge sales in other absolute pillars of the American economy. We're talking Bank of America, the energy giant Chevron. These are blue-chip companies. So the pattern here seems pretty clear, right? This isn't just about shifting money out of tech. It looks like a broad reduction of risk across the entire market.
Okay, so this leads us to the billion-dollar question, or maybe the trillion-dollar question. Why? Why this historic sell-off, and why is it all happening right now? The source we're digging into really centers its entire argument on this question. It suggests that Buffett is seeing something on the horizon that most of us aren't, that he's acting on analysis that points to a major economic storm brewing.
And here's a really important detail the source highlights. This isn't just Buffett, getting older and more cautious. His younger investment managers, Todd Combs and Ted Weschler, are apparently also selling aggressively. So this is framed as a team decision, a unified all-hands-on-deck defensive move.
So, where is all this concern coming from? Well, according to the source, the main driver here is a massive problem that's basically been hiding in plain sight for years now.
And the argument really kicks off with this number, $36 trillion. That's the U.S. national debt. I mean, it's a number so big it almost loses meaning, but the source argues it has finally reached a critical, totally unsustainable tipping point.
And here's where it gets really crazy. Just the annual interest payment on that debt is now over $1 trillion a year. Let that sink in. That's more than the entire U.S. defense budget. It's more than Medicare. The argument is that we're in a debt spiral, and it's starting to accelerate.
So, according to the video, when a government gets this deep in debt, it really only has 4 ways out. Option 1, grow the economy so fast it outpaces the debt. Option 2, massive tax hikes. Option 3, huge cuts to government spending. The problem? The source says all 3 of those are basically politically or economically impossible right now.
So what does that leave? Well, it leaves the 4th option, the one the source claims Buffett believes is the most likely endgame, debt monetization. And what's that? It's basically when the central bank just prints money to pay the government's bills.
And this is where the rubber really meets the road. The long-term danger that the video lays out, the consequence of that money printing, isn't just a temporary bump in inflation. No, the argument is we're looking at persistent structural inflation that just grinds away at your wealth for decades, destroying the value of your savings, your bonds, pretty much everything.
But it's not just about the national debt. The source material points to a whole bunch of other warning lights that are supposedly flashing red right now, all supporting this super defensive strategy.
For starters, let's look at the market itself. The video highlights 2 big ones. First, corporate profits are at historic highs, which sounds good, but usually that's what happens right before they fall. Second, The Buffett Indicator, yeah, his own indicator, which compares the stock market's value to the economy's size, is reportedly screaming overvalued, higher even than it was during the dot-com bubble. Wow.
Okay, what about the average person? Well, the picture there is also pretty grim, according to this analysis. We've got record-high consumer debt, think credit cards, car loans, while at the same time, the personal savings rate has totally collapsed. It's down to levels we haven't seen since right before the 2008 crash.
And then you've got the financial system itself. The source points the finger directly at commercial real estate, saying there's a huge crisis looming there. You've got tons of empty office buildings and a mountain of debt that needs to be refinanced at way higher interest rates. And guess who's on the hook for a lot of that? The regional banks.
And finally, let's zoom out to the world stage. The argument points to rising geopolitical risks that could mess up global trade and a really serious challenge to the US dollar's role as the world's go-to currency. All of this adds even more layers of risk to the whole system.
So, okay, if that's the scary diagnosis of the problem, what's the solution? Or at least what does this video claim Buffett's solution is?
Well, it really boils down to this simple, stark comparison. On one side, you've got this system overloaded with $36 trillion in U.S. debt. And on the other side, you have Berkshire Hathaway methodically building a $325 billion mountain of cash. It's like a strategic counterbalance. And according to the video, this cash isn't just sitting there collecting dust. No, it's a war chest. It's being built up to give them options, to prepare for what they call a generational buying opportunity. In other words, waiting for everything to crash so they can swoop in and buy amazing companies for pennies on the dollar, just like Buffett did back in 2008.
And that really leaves us with the final big question from this whole analysis. Is this massive pile of cash just a defensive move, a way to survive the crash that Buffett supposedly sees coming? Or is it actually the setup for his greatest offensive play ever? Is this about playing defense, or is it about getting ready to go on the attack? The source leaves you to wonder.